Good day, everyone. Ali Safi here from Safi Financial Network. Today is June 22nd, 2024. Here is weekly edition. All right, so let's go to chart, see what chart tells us. So here is S&P 500 weekly chart. So as we expected, market start its correction. I believe that the correction is underway for S&P 500, and we had fantastic rally, folks. So this is kind of like April bottom, and after that, we just had 2 weeks very minor, shallow corrective move in May 18 and May 25th week. And then market just getting back to the upside. I believe that we are kind of like a pretty close to very important intermediate top based on the weekly cycle. So weekly actually rejected nicely 5,500. We are just getting down to 54.68. This is kind of like the area that I was looking for. Here is the target, at least minimum target for this year. Even if it goes higher, which is 6,000, you shouldn't be surprised, but I should say 5,500 to 5,800. That's the level that I have in my chart. So we will see if market keeps higher. I would say it's going to be less likely, and the upside target is very, very limited. We can see some kind of like a pullback, a minor corrective move to here, which is 2 to 5%. So 5,200 to 5,300, that's going to be the level that I have based on the weekly chart. Here's the previous demand area. Here's the previous breakout. So everything comes together that we can have a 2 to 3 weeks, even 4 weeks corrective move until, let's say, second week or third week of July. We should see market corrective movies there. But after that, I should say we can get back to the bullish momentum. Moving on to daily chart, here's the S&P 500 daily chart, 2 days, actually 3 days correction. Just a coming minor correction started, and we can go all the way down to July 21st, which is going to be 1 month, let's say. So we can see some kind of like a minor pullback here to this area, which is going to be 5,300 to 5,372, even lower, can go down. That's going to be the maximum level I have in my chart, 5,260 to 5,295. So let's just mark it in our chart as like a tracker for the future. So this is going to be our 78 to 61%. So this is the level that I have based on Fibonacci retracement. And also this is very, very important level as well. So the timeline is going to be July 7th to July 14th. That's the bottom that I'm just looking at. So if it happens earlier, we will take it. So whichever comes first, we will take it. But I believe that July 7th to July 21st, these 2 weeks are going to be market bottom. The bottom level is going to be 52.60 all the way up to 53.53. So we will see within this within these two areas, we can see how market is going to react if it goes downside. Moving on to weekly chart on Nasdaq. So Nasdaq, we just got a better kind of like a reading from the chart. Again, marvelous move to the upside based on all indicators that I have. Here is the RSI. Stochastic is just getting into bear reversal. MACD, we are showing obvious divergence here. RSI, obvious divergence here. And the stochastic is getting back to the sell signal. So also price action wise, which is the most important one, we hit new all-time high, 20 grand, and then getting back to the downside. So the downside level is going to be 18,200 to 18,300. That's going to be the level that we can see. Moving on to daily chart. So here's the Nasdaq daily chart. We can go all the way down to 18,600 to 18,400. So this is the level that I have. Like this is the white range bar area, and also this is the area that we can see. Very, very important area for Nasdaq. So we can see how daily candle is going to close. But I should say if market goes to correction, which I believe that sharp correction for Nasdaq is going to be very, very potential scenario, we can get into white range bar. This is the bottom, and this is the previous breakout. This is the demand area. Everything comes together that I'm saying this is going to be a nice level for buy. So if it gets down to here, we can see based on the timeline and based on the price action, we can get back to the long position. Right now, I should say you should stay on the side, keep your cash on the side. Even short position could be kind of like a prudent scenario if you put your stop loss based on this candle high. Moving on to Dow, which was kind of like a leading to the upside, and Dow obviously shows breakout above this supply area, which is very, very important. Right now, the same scenario here is going to be happening. So this is going to be 39,600. So 39,600 is going to be this area. And I should say this is the area that we can see. So any pullback could be kind of like the scenario that we can get into this area, and then sell signal is going to trigger. We don't see any head and shoulder here. So I would say we can just bring our downside target to this area. So this is kind of like the wide range bar. And I believe that this wide range bar is very, very important. As you see, buyers are putting their orders here, push the Dow higher. So this is the area that I'm just looking at. Even for the weekly chart, I should have started with weekly, but anyway. So even with weekly chart, we see some kind of like a nice breakout to the upside. And MACD is just showing kind of like a reversal to the upside as well. I believe that Dow, we shouldn't see any kind of like scenario. Even Dow is forming weekly very nice reverse head and shoulder here, if you just see that. So if we get above this previous top, which was all-time high, we can get nicely to new all-time high. So Dow could be the leader, while while Nasdaq and also S&P could be laggards. So money is flowing, I believe, that into heavy value names, healthcare, they're just getting better, and also the other names as well, industrial names. Moving on to gold, which a weekly chart tells us that still we are in a corrective move, but very close to the bottom. So look at this. Here is the price action consolidation. Here's the consolidation. The previous closeout bull reversal just happened within this consolidation. We are almost getting the same signal here. So if you just see that stochastic momentum, also we are just seeing a hidden divergence, bullish hidden divergence with a stochastic bull reversal in oversold area. And also here is the pattern that I'm just looking at. So if gold is getting to breakout, we should see some kind of like a marvelous move, something like this is happening. So don't be surprised in a weekly chart. As you see here, gold can go all the way to 26, 27, 2,800 even down the road. So that is kind of like the scenario that I'm just looking at. I should say a minor pullback could be kind of like a good buying opportunity. So don't afraid of these sell-offs here. Daily chart shows kind of like a different signal, but I believe that even if we go down, to this level, I should say this is going to be the last call for bulls to get in, because I believe that this area would be a fantastic shakeout, washout low for gold, as we are just getting into a buy signal in a weekly chart. Moving on to silver, it's kind of like the same scenario here. So silver weekly chart, we show very, very nice consolidation pullback. However, higher shadows are stronger. So this means sellers are taking control actually here. Sellers took control, and can see some kind of like still minor correction to this area, which is $27 to $28, 27.50 to 28.50 to this area. And I believe that after that, we can see nice parabolic move to the upside for silver as well. Moving on to crude, which had a fantastic move to the upside. Crude is just overstretched, overbought in daily chart. In a weekly chart, it is kind of like a different story. We just see a breakout. So what I see here, any pullback in the daily chart is going to be minor. 2-3 days pullback would be a fantastic buying opportunity, because based on this chart, I should say crude is getting ready for exponential rally to the upside. If you just stretch these two pivots all the way to here, and if you just stretch down here, so this is the major dynamic trend line or triangle we can see here. So this is the area that crude is just consolidating within this gigantic weekly trend line. Start at 2021, 2022 peak, and then just mimicking around like a ping pong ball into this box or triangle. I believe that a weekly chart tells us that we are seeing a very nice leapfrog pattern. Also, stochastic wise, we are pretty close to breakout. So if we get above this top, which is going to be 80, I should say 685, 86, pullback would be a fantastic surge all the way to $120 crude. It is hard to say that, but I believe that we are kind of like in or about breakout above this level. I don't know if it's going to be another VAR, hopefully not, or a systematic risk in energy market. But I should say daily chart is overstretched. We can see some kind of like a pullback, minor correction, providing a bull flag for us for a next rally. Above 84, or I should say 87, 86, great buying signal, folks. So based on the daily chart, if we get above this, the rally start at $120 for crude is coming. Moving on to individual names. So starting with Bitcoin. Bitcoin yesterday just sold off, and we're just getting close to this important demand area 60 to 62 ground. Ethereum, the same pattern here. We just consolidating. I believe that even sharp sell-off could be kind of like a nice scenario for buy. Bond yield is just forming another bearish consolidation, but this bearish consolidation is not strong, I should say. We can see some kind of like a hiccup or bounce back up to 4.8 to 4.85. We will see a TLT Treasury consolidation here can sell here to 92 to 93, but I believe that that's going to be very, very small pullback. VIX after Doji bar on Friday, we can see some kind of like a consolidation. Again, market is about to correction, so you can expect VIX is spiking up. DXY is is leading the bond yield. So I believe that DXY can go test this high, even higher, while bond yield is lagging. So this means market is just piling money into US dollar as a safe haven. It doesn't mean that they are going to see the interest rate is going to pick up again, or Federal Reserve is going to just, I don't know, pause or whatever. They are saying this means when gold is up or consolidating, when silver is up and US dollar is up, and when the stock market is at the top, this means people are piling money into US dollar, precious metals as a safe haven. Just because the stock market can see a forecast or can see like a correction, while big heavy value stocks like healthcare names, United Health, Johnson & Johnson, and the other ones are doing better now. Magma indicator, just consolidating. I believe that it can break down to this area. Not a big deal, but it can go down. Apple, as you see, reversal is there. We sold off our Apple position almost in one of our portfolio. We bought it here, we sold here. So good for us, good for subscribers. Congratulations. We will get back to Apple again when it's the time. Amazon, nice breakthrough. So Amazon is kind of like a leading. This is very, very strong pattern. Quadruple top. If it goes above 192, it can go higher. Meta, $6.92 down. So this is kind of like the scenario that Meta is showing like Apple. Microsoft is above previous top here, new closing all-time high. So that's very interesting. Google, $3.33 up, new closing all-time high. Google is about to break out this weekly pattern, I should say. Netflix, $7.09 up. This is very, very strong chart. It's just going break through all the previous supply area. Tesla, $1.44 up, still consolidating prior. This is strong 190, 200 area. So this is very, very important. Semiconductors, I should say, this is kind of like the laggard, and this is the weakness of the market. So it can go down as it was parabolically moved to the upside. SOX, the same pattern here, $2.46 up. Taiwan Semiconductor, $1.42 down. AMD, 55 cents down. NVIDIA is just leading to the downside. Doji bar, previous breakout, but still it can go down to $95, 100. That's going to be a good potential buying opportunity. Texas Instrument, $2.77 up, not a bad session. Lam Research going down after hitting new all-time high 2 days ago. It just came down 2 days now. Financials, they're lagging
16 cents up. However, still they're just working out on their pattern. KBE 6 cents down. KRE 9 cents down. Not a bad pattern. All of them actually are strong. JP Morgan $2.37 down. Goldman Sachs $7.87 down. This is kind of like a week. It can go to the lower low for the final low. Bank of America 50 cents down, bullish consolidation, still good pattern here. Nothing wrong with chart Wells Fargo. Nice back test to this breakout trend line. So it can just recapture the previous top, 59, then it can go higher. Moving on to gold miners, which came down on Friday's session, but not a bad session. Still overall, it is pretty good um, pattern. Even if you see the cycle, my previous video on the gold miners, so you can see that they are pretty good. GDXJ, the same pattern here, AEM, 84 cents down, Newmont, 55 cents down, needs to go above $44, then it can go higher. Franco-Nevada, 70 cents down. Gold Barrick is 40 cents down. XLE, which is Energy Spider, the next sector. This is the previous kind of like a bull flag, I should say. This is kind of like a bearish channel, but right now we are just need to see a confirmation. The first confirmation is about here, 91. The third one, actually the second one is going to be 93. So if it goes above 93, we can see the bull signal is here, buy signal valid. Moving on to XOP, oil and gas exploration ETF, nice candle here. OH 98 cents up, and Exxon, pretty nice pattern, 98 cents down. Chevron $1.36 down as well here. So we will see how it goes. All in all, I should say market is about to correction. Everyone needs to be careful, but this correction can last 2-3 weeks, and then after that we can see rallies back to the market and we can get back to the buy signal. All right, I believe I covered everything. If you like this weekly edition video, please smash the like button, put your comments down there. I'm pretty interested to see what's your comment. Share it with your friends, whoever like stock market analysis. Have a fantastic weekend. See you on the chart. Bye-bye.